What is up, Crypto Pulse family, and welcome back. If your portfolio is looking scarier than my search history right now, don't panic. We're going to break it all down. We're diving deep into why the market just took that nosedive, and we're going to uncover a really, really weird thing that happened with altcoins. But first, do your part to fight the red candles and absolutely obliterate that like button for the YouTube algorithm gods.
Okay, so let's get right into the big question on everyone's mind. Was that a terrifying market crash, or was it a massive buying opportunity? I mean, the Fear and Greed Index totally tanked, screaming extreme fear. But, as seasoned investors, we know that when everyone else is scared, that can sometimes be the best time to pay attention. So let's dig in and see what's really going on under the hood.
All right, the main event, the big kahuna, was of course Bitcoin. It took a serious, serious tumble. But what's so interesting here is why it happened. You see, this wasn't just some random panic sell-off. Nope. This was a very specific technical move that, honestly, a lot of analysts were waiting for. It was like a piece of unfinished business that the market just had to take care of. And this is the number that had everybody sweating, $89,000. Bitcoin dropped all the way down to a level we haven't seen in, well, a very long time. After just chilling and consolidating for so long, this move to the downside was sharp, it was fast, and yeah, it was pretty significant. But like I said, it wasn't random at all. And here's the reason why. It's this infamous thing called the CME gap. So here's the deal. The Chicago Mercantile Exchange, where they trade Bitcoin futures, it closes on the weekends. But crypto trades 24/7. So you can get this gap between the Friday closing price and the Monday opening price. And for whatever reason, the market has this weird habit of wanting to go back and fill that gap. And that's exactly what just happened. That big monkey on our back, it's gone. A major piece of uncertainty is now officially off the table. So, Bitcoin filling its gap? That makes a lot of technical sense. But this is where things get weird. Like, really weird. This leads us to the most fascinating part of this whole event, what I'm calling a true market anomaly. Because while Bitcoin was taking a swan dive, the altcoins did something nobody expected. They basically built a wall. You know the old saying, right? When Bitcoin sneezes, the entire altcoin market catches pneumonia? Normally, a 10% drop in Bitcoin means like a 20 or 30% bloodbath for the alts. They just get absolutely hammered. But not this time. Bitcoin fell hard, for sure, but the altcoin market, it just held strong. It was so unusual. This kind of divergence is bizarre, and you know what? It could actually be a very, very bullish sign. And hey, don't just take my word for it. The numbers back this up completely. While Bitcoin's price was falling, its actual dominance over the market dropped by a full 4%. That's huge. It tells you that capital wasn't just fleeing crypto altogether. It seems like the relative strength was actually flowing out of Bitcoin, while altcoins held their ground. This wasn't a market-wide panic. It was a very Bitcoin-specific correction. So, what does this all tell us? Well, the evidence is pretty clear. This was not a retail-driven panic. This wasn't you or me or the average Joe getting scared and dumping all their altcoin bags. No way. This whole move seems to have been orchestrated by the top-level players, the whales, and they were operating almost exclusively in Bitcoin. It was a strategic shakeout, and that's a world of difference from a real panic. Watching all this crazy action play out, it really brings us to a fundamental question every single one of us has to ask ourselves. How you react to a dip like this depends 100% on your game plan. So are you a long-term holder, a HODLer, or are you a short-term trader? Your mindset, my friends, changes everything. You know, John Deaton, who's a huge voice in the crypto space, especially for the XRP community, he just captured the long-term investor mindset perfectly with this quote. He flat out admits that trying to time the market is basically a losing game. He says, "It is not fun to experience these sell-offs and bear markets, but it will pass." That perspective is just so crucial if you're not glued to the charts every single day. Let's break this down. On one side, you've got the trader. Their time horizon is day-to-day. When they see a dip, they see a chance to make a quick trade, to profit from that volatility. Their mindset is laser-focused, right down in the trenches. Then you've got the long-term investor, the hodler. They're thinking 5, 10 years out. For them, a dip isn't a panic signal, it's a potential accumulation zone. They're calm, cool, and focused on the big picture. All right, so the CME gap is closed. The weak hands, the paper hands, have probably been shaken out. So the big question is, what happens now?
From a technical standpoint, analysts are really looking at two main scenarios for Bitcoin from this point on. Okay, path number one is the super bullish one. We'll call it the flipperoo. Now that the gap is closed, we could see a powerful V-shaped recovery, a really sharp bounce right back up. But then there's path number two, the golden pocket. In this scenario, we might see a bit more short-term pain. The price could dip further, down into a key Fibonacci level around $75,000 before it finds its real bottom. Both are totally plausible, so being prepared for either one is key.
And hey, before we wrap this up, just a quick bonus update on a story I know a ton of you are watching very, very closely. The whole situation with the potential new XRP ETFs.
So yeah, there was a lot of chatter about new XRP ETFs launching this week. Now, reports are suggesting there might be a little delay, maybe pushing it to next week. And you know what? For any long-term holder, this is not a big deal. The exact timing, this week, next week, it really doesn't matter as much as the event itself. The smart money is cool, calm, and collected. It'll happen when it happens. So at the end of the day, this big technical dip shook out all the short-term players, and more importantly, it revealed this incredible underlying strength in the altcoin market. It really forces every single one of us to take a good, hard look at our own strategy. The paper hands have folded, so the final question is, what's your game plan? Let me know down in the comments. That's the alpha for today. If you learned something and want to stay ahead of the curve, make sure you're subscribed. Seriously, hit that subscribe button harder than Bitcoin hit that CME gap. It's free, and unlike some of my recent trades, it's 100% upside. Stay strong, and I'll see you in the next one.